All right, Derrick, how you doing this morning?
Hey, good morning. Great to be back. How you guys doing?
Yeah, welcome back on the show. We're doing well, trying to digest all this market volatility. Of course, two big red days, Monday and Friday, getting that VIX up a little bit higher, some more chop. What have you been watching, man?
This market got kind of exciting recently, didn't it? It's
Yeah.
about time. After that slow grind up for months and months and months, we got some excitement with that VIX pop for sure. I'm very focused on the market itself right now. Whenever the entire market becomes in play, this becomes kind of my cue for everything that I do. It's interesting
Nice.
that we saw a couple really heavy sell days in a row, and the market pre-market at one point this morning when we were negative, when I woke up nice and early to start my pre-market trading, we were starting to approach what I consider to be more extreme extension to the downside right now, and that's into a massive support level for the SPY, which is this 503. If you remember back on all the way back when everything was rosy on February 22nd, that's when NVIDIA last reported earnings, and the entire market had that huge gap up. Well, the low of the SPY on that day is 503 spot 02. And pre-market this morning, 503 spot 10. So we got, like a third day gap down potentially at one point this morning. Again, now we're up into this huge support level. I'm like, all right, this is a spot here. I think I need to take a little bit of a stand on the longs to see if I can get at least some sort of bounce trade. And then to me, the more interesting part about this market is going to be after we get a bounce. The market right now still has the potential to just kangaroo all the way back up if the VIX wants to come back down and you get some of that systematic buying to come back into the market, and next thing you know, we're right back where we were. But if we bounce off of this more oversold area that we're in right now, create another lower high, and then break that 503, I think that is when we are potentially in a lot more trouble. And that also will be a spot where I think that we'll begin to see even more systematic selling from funds come into the market, and then you gotta watch out a little bit. So very, very short term right now, I'm looking for a bounce. I got my little shopping list out this morning on some stocks that are very oversold. But what does that bounce turn into, I think, is the key question at this point.
You have that shopping list handy? Like, what stocks are you looking at here, Derrick, that you think are oversold? Because there's a lot of people interested in buying the dip.
Sure. So there are some names that have gotten super beaten up, probably more with the interest rate move than anything else. I think got a jump start on the down move before the market itself did, because market's always being held up by those usual suspects. I got a few on my list that have been totally beaten up, a few of which I'm already in, a couple I'm looking at that I'm not in. Just so everyone knows if I'm talking my book or not, I am in this one already, which is the old Overstock, which is now Beyond, BYON. This thing has just gotten annihilated this month from $36 down to $24.50 this morning. It's, I don't know, 8 down days in a row. There's a lot of extension. It's into the 200 day. There's some support in this $24, $25 area. So if the market can bounce a little bit, I've got that one on the list. One that I'm not in, but I'm watching at this point is AI. Haven't traded this name in a while, but this is another one that's just been destroyed.
Wow, some of these stocks.
Yeah, some of these names are wrecked. Absolutely.
You look at the S&P, Derrick, and you don't see this story here. What you see is, we're pulling a little 2-3% correction here. It doesn't feel bad. This stock just got cut in half. I mean, almost cut in half, like 40%. So there is a little bit of hidden carnage here when you start getting away from that mega cap trade.
Right, exactly. And all I'm looking for here is, I'm not looking to buy AI at 20 for a move back to $38 at this point where it was in the beginning of March. I want to see if I can scoop up RDR type of trade. It's one of the trades my team and I look for to basically buy this thing on the way up, see if I can get a bounce back to more of its equilibrium zone, which I would say is a space between like $23 and $25. It could present a good risk reward opportunity as the SPYs maybe make a stand at that 503 area with some extension. And then at that point, I want to probably book the vast majority of my profits, maybe keep a little bit just in case that retracement higher actually becomes a reversal, but then really reassess at that point, are we getting that lower high with the market? In which case, watch out, make sure you book your profit, or do we kangaroo all the way right back up, which I do think the market still has the potential to do that if we can get through some of these more macro headwinds.
There's a couple. Anything else there on your watch list?
Unity, another one, wrecked over the course of this year. Started the year at $42. It broke 25 support yesterday. So 25 is a really big level on this thing. Again, I don't want to be catching a falling knife in any of this stuff, but if I can buy the way back up, maybe on the way back up through that 25 level, you don't have the same degree of extension, I don't think, in this Unity as the others. Sentinel 1 is another one that I've traded a lot.
Oh yeah, you gave us that one, and it was really good actually.
You like the single letter tickers.
And Derrick gave us this one. It was a great call. He gave us this one back at like 17 or 18, like I think it was in the fall. And, you know, the stock obviously went to 30, so it's almost round tripped it here now. So you're looking back at that 17, 18 level, maybe reload?
Yeah, 20 is a big level. There's a big gap fill there if you go back to the beginning of December on an earnings report that into 20, same thought process here. You got the 200-day at $20.60. You got $20 as some potential support. You've got extension to the downside. It's a day 3 down with the market at support. I want to see if I can get a bounce rate out of these things at this point. There is some carnage out there, and I think it's okay to have a little bit of a shopping list to try to take advantage of that at certain points. But at the same time, don't marry these things at this point.
Yeah, and Derrick, if you have charts that you've, drawn lines on and stuff, and you have them handy and you want to pull them up, feel free to do so. We also have a QR code in the bottom of the screen if you want to trade with Derrick for free in his Pro Desk virtual trading floor, April 16th through 19th. So that is the rest of this week. Again, we got the QR code on the screen. I also threw the link in the chat. It is also in the description, so I'll throw that in the chat one more time if you guys want to go check that out, get all of these setups from Derrick, and hop in his trading room.
Yeah, definitely everyone should make sure to check that out. I was just thinking before we started our little conversation today about the VIX, right? Because the VIX is so important right now, especially because you've got so many funds that are out there who base the amount of leverage that they have in the market just very simply based off the price of the VIX. They say higher volatility equals more risk. And I was thinking right before we came on about my trading team, because my trading team started on our trading floor for T3 in New York City. I spent 10 years there before COVID. And now we've really switched the entire team to being remote and utilizing this virtual trading floor instead. But I used to do all these interviews in person. And I would interview an MBA guy, and I'd be like, what does risk mean to you? And they would say volatility. And I always thought that was an interesting answer, that all these MBA guys learned that risk is volatility when they were in school, because I never interpreted it that way. I always interpreted as more of a day swing trader, volatility to be opportunity. But now, as I understand the importance of systematic flows in the market, which I think especially over the course of the last few years has just become an increasingly important part about how markets work and how they function and how they're structured. And it's something that all traders should be paying attention to if they're involved in markets. I started to realize it's like, well, even if I disagree with that MBA guy and I think that higher VIX, higher volatility means more opportunity, there are all these systematic funds that are managed by MBA guys who say, oh boy, the VIX is moving higher, I need to liquidate. And that higher VIX can actually create that additional selling just because, well, that's what these guys were all taught in school.
Well, it's kind of like a chicken and the egg type thing as well, because you have the selling and the freaking out that makes the VIX go higher, and then you have, it's like a positive loop where then the VIX goes higher, and then you see the more selling, and that makes the VIX go higher again until it hits a certain point where then people start looking at the valuations and saying, oh wow, this looks really attractive, I got to go buy this. So definitely an interesting point there, Derrick. That when
that's what we call a trend, right? That's literally what a trend is. It's a feedback cycle of buying or a feedback cycle of selling that comes into the market, because trader A sells, it forces trader B to sell, which forces trader C to sell, and the next thing you know, you're working into that downtrend.
Yeah, I say it kind of jokingly, but I'm like, yeah, selling begets selling until it begets so much selling that it begets buying. Like, because you get down to a certain point, and then people are like, oh, I got to buy it down here after the selling that, brought all the selling. Then it gets down to a certain point and you got to buy it back. So, Derrick, right now, we're talking about the VIX creeping higher. What do you think from an overall market standpoint? You think like big correction coming? You think buy the dip opportunity, or are you just taking it day by day?
So I'm definitely taking it a little bit day by day. I think that we're at an extremely crucial point with this SPY approaching 503, and with where the VIX is. The VIX has stayed very low, very consistently now for over a year. And part of that is because we have all of these, again, systematic ETFs even now that JP Morgan has been starting to get their clients in to just sell vol, and that helps keep an underlying bid in the market. So I think that we're at a really crucial point where it's like I was saying before, if we get a little bit of a bounce here, but then we lose 503 in the SPYs, I think that becomes actually a trigger to see significantly more selling, but also we could snap right back. Obviously, there's two main factors that are the catalysts right now. One is the geopolitical situation with Israel and Iran, and the other is just interest rates and inflation and the Fed. And the really interesting thing about those two catalysts is, so relative strength and relative weakness is a really important factor in my overall trading. I think depending on which catalyst is affecting the market in whichever moment you're looking at, it creates a very different relative strength, relative weakness dynamic. Because it seems to me that when the forefront of the selling is coming from geopolitical situation between Israel and Iran, that actually leads to the TLT getting bought up a little bit as a fear trade and more weakness in the Qs, because that's the more expensive part of the market. That's where everybody's got their cash parked. So when I'm seeing the market selling really heavy intraday because some new headline came out on the Israel-Iran situation, and I'm looking for maybe like a quick oversold bounce trade, I'm looking more in the IWM for that oversold bounce. And the Qs are acting very relatively weak in that moment. But then next thing you know, maybe it's not the geopolitics that are moving the market, it's interest rates. And when it's the interest rates moving higher and the TLT getting crushed, right before I came on, you guys were talking about TLT 92, which was a massively important level that we lost. When I'm seeing this TLT getting crushed, it's the absolute opposite relative strength, relative weakness dynamics. If I want to be buying anything, the Qs are where the strength are, because Microsoft and Apple, they don't care where interest rates are. I mean, at a certain point, if it really begins to affect the economy, which it hasn't so far, then they'll start to care. But they're locked in at for 40-year debt at 2%. Does it matter to them if interest rates are at 4% or at 8%? It doesn't matter to them at all. But it certainly matters to those small and mid-cap companies that compose the IWM.
Rivian, yeah, I mean, it's gonna matter to them.
Oh yeah.
All right, well, Derrick, coming up on 8:50, any final thoughts or trade ideas as we head into today?
The final thought that I would always have for everyone who might be paying attention is no one's a perfect trader, and the VIX is higher right now. And while I do think that creates opportunity, you got to remember that risk management is really the key to success in this business. So no matter what your thought process is, if you're like me, where you're thinking maybe you can get an oversold bounce, or you're a super big bear and you think that this is just the beginning of the end and we're going to continue to go lower, you might be right. You might also be wrong. I'm wrong all the time, and I do this professionally as a living. The key to success, what really separates the people who become successful from those who don't, is how they manage risk when their ideas don't work out. So whatever you're thinking, make sure that you have that game plan in place just in case you happen to be wrong. That's the difference between you being successful and you not being successful.
Well, Derrick, again, thank you for hopping on with us today. If you want to see how Derrick is managing that risk and finding some opportunities in this market, again, hit that QR code on the bottom of the screen or link in the chat. I'll drop it one more time. Derrick, thanks as always for hopping on. Always great to catch up.
Thanks a lot, guys. See you next time.